Welcome to the Housing Finance Commission Condensed Fundamentals. This is Part 5, our case study. I am Lana K. Lipp, and I will be presenting this session today. In this webinar series, it's been put together in order to give you some training while all our fundamental classes have had to be canceled due to the COVID-19 crisis. This webinar training is not in lieu of our normal full compliance fundamentals. We encourage you, once we can get those classes back up and running, to come in for one of the classes if you haven't already done so in the past. No certificate will be issued for this webinar class, again, because we do want you to come in, at least for those of you who have never been before, and do an in-person fundamentals. This session in particular, it is best if you have viewed parts 1 through 4 of this series, and also the Resident Certification Forms webinar. This will give you a basic background in order to be able to go through and actually complete the case study. You can find these trainings on our website in our compliance workshop and trainings area. Notice we have 4 parts posted on this page. Part 5 will be posted as well as soon as I get this recorded. And there will also be, with Part 5, a file for you to download, which will be the case study material. There is also a link to a compliance update that Crystal and Eric did. There's some good information on there, although we have been updating more information regarding COVID as the situation has changed. Last, you'll see on that list is a link to our Resident Certification Forms webinar that Eric did in 2017. A few of the forms have been slightly updated, but if you're really looking for these are our forms and this is how you should fill them out, I highly suggest that you view that forms webinar. Other thing to know for this session is the forms and the calculations that we're going to go through. These are commission forms, and this is the way we ask that you calculate income. Some other programs might have slight variations. For example, HUD, RD, Home, Housing Trust Fund administered by the Department of Commerce, and then there's other local and state funding programs. In addition, your management company, your owner, or your tax credit partners may have stricter requirements than we do at the Commission, and that is fine as long as you are meeting our minimum requirements. If someone is requiring you to go a step further, that is perfectly acceptable as well. But please realize the training that we're going through is how you would meet the Commission requirements. So for this case study, this is going to be an exercise where we're going to assume that you find a certification in a resident file when you're looking through files. The Housing Eligibility Certification, or the HEC, is incomplete. So what you need to do at this point is to go through the certification, calculate the income, and complete the Housing Eligibility Cert to verify that the household really was income qualified at the time of move-in. There are 3 steps to this process. First, you want to print the case study certification packet posted on our website. I just showed you where that will be posted. You'll need the complete packet to go through, to review, and then as I go through the case study, we're going to walk through individual calculations, and then you can fill those in on the copy of the HEC that you print with the case study. So once you have that packet in hand, I recommend that you pause this presentation, give yourself some time to work through the packet. You want to keep in mind that this is a packet that you found in a file. So this is from a 2016 move-in. 4/1/16 is going to be your effective date, so please keep that in mind when you're completing the certification, especially when you're looking at dates, ages, and all that type of information. Once you have gone through as much as you can in the case study, also paying attention to the fact that the assets were already filled in on the HEC, and that's just really to make this more of a case study where you're working through income calculations. But we certainly will go through the asset section when we're reviewing the HEC as well. Once you are ready to review, then go ahead and resume this presentation, and we will walk through each step of the certification process. So look at that printout and have fun, and we'll be back with you as soon as you want to resume. Okay, I'm going to assume that you have looked at the certification packet and looked at all the verifications and gone through and tried to do your own calculations to see if this household really qualifies. We're going to look at the HEC in pieces as we go through the calculation. So the first thing we're going to start looking at together is the resident eligibility application, or our REA. Oh, and I also did include in the certification packet some information like the income limits applicable in 2016 and what a calendar for calculating year to date that you might need, and also a part of a Exhibit B, so you know what the set-asides are at this property when you go to complete the HEC. So let's start off looking at the resident eligibility application. Again, we know this is for an effective date of 4/1/2016. We've got our household members listed. They've answered the student question. Now on our current form, please realize that that student question is slightly different. There's a full-time, part-time, or NA, which makes it a little clearer. So going forward, but at this time, this was a certification that was in place. We look at it, we see we have at least one household member who's not a student, so we know that we do not have a student issue with this household. So we can go ahead and just look at their income for qualifying purposes. Sherry is our head of household, and she is saying that she has a job. Also child support. And of course, we only have 2 spaces at the bottom of this form. Our new one is slightly different. But so we have 2 spaces there. If we go to the next page, which is pretty much a duplicate other than the household composition information isn't filled out, but it continues on with additional household members. We have Samantha, and then who has a job at Burger King. And then we also have Harold, who's telling us he has Social Security and a pension account to look at. So for each adult in the household that we're going to ask that they complete page 2, 3, and 4 of the REA as well. So just going to walk through quickly. We have Sherry completing her REA. She's claimed a job. She's claimed child support. And notice there on question number 6, she hasn't told us whether or not that child support is court ordered in the middle section. However, since she's claiming it, a dollar amount telling us she has a support case, that's okay that that's not completed. We'll know that that's a yes. If you have a household with minors and they say they are not getting child support, please note they do need to fill out that middle section indicating whether there is any court-ordered support. If there is court-ordered support and they're not collecting any, you need to ask them if they've made reasonable attempts to try to collect that, and you can use our child support affidavit to document those attempts. The best attempt is to go to the state, to the Division of Support Enforcement, and you can get a great verification from them on payments that have been made. Also notice on number 7, initially Sherry made an incorrect check mark in the yes box on that alimony. The correct way to have the resident show that it was an error is 1 cross out through the incorrect answer, have them initial it, complete the correct answer, and then circle the part that's correct. That's the preferred way that as an auditor at the commission, we can tell which is in fact the correct answer. Notice she put 6,000 in there, so probably put the child, was thinking the child support again, but so she also has crossed that out and initialed that amount as well. Going through the rest of her REA, she's not claiming any more income. She's not claiming any assets. She did sign the REA, and site staff witnessed the REA. Notice you must witness the signature when the form is signed. We expect that an REA is completed as part of an interview process with management or site staff, so that they are available to answer questions that a resident may have and guide them through the process. An REA should not be handed to a resident, have them fill it out, and bring it back. Of course, during the current COVID situation where residents may not be able to come into your office and meet with you, we have made allowances for what you need to do as far as having the resident sign. We have fillable forms that allows for an electronic signature from the resident, and then we have directions on our COVID FAQs how you should go about then witnessing the signature when the packet is returned to you or submitted to you electronically, and what note you should add as to why it wasn't witnessed in person. So, but that's specifically for COVID. Hopefully that will not last very much into the future. Hopefully we'll all be back in our offices and back to work as normal. So those are Sherry's pages. Same thing, Samantha. Samantha, if you looked closely at the dates on the REA on the first page, Samantha 17 at the time the paperwork is being done. However, during the next 12 months, she will turn 18, so we would ask her to do an REA herself. So she's gone through, she's claimed a job, and we know from the first page of the REA that was it a Burger King, I think it was. So she has a job. She's not claiming any other income, not claiming any assets. Samantha signed and her signature was witnessed. Moving on to Harold, if you remember from the first page of the REA, Harold indicated that he had Social Security and a pension. And as he went through his REA on question number 4, he disclosed the Social Security. And on question number 11, he disclosed his pension, and he's put down the source as DFAS, which is a very familiar federal retirement source. So we know that we need to verify those two things. When it comes to assets, here's where we see Harold filling in that he does have assets. He's indicated a checking account, a savings account, another source at Reliable Bank, either a treasury, CD, stocks, bonds, some sort of account at Reliable Bank with a substantial amount of money there, which right away tells us our assets are going to be over $5,000 for total household assets, which means all assets will need to be verified. Also on number 23, if you look, it says that Harold has real estate or a home that he is in the process of selling, and he's given an appropriate or an approximate value on that house of $275,000. Continuing on, no more assets disclosed. Harold has signed and staff has witnessed his signature. So there are our REAs for all 3 adults in the household, and that lets us know the type of income and assets that we're going to need to see verified. Next step is an authorization form, and when residents, whenever you have a resident complete a packet, it's recommended you have them complete an authorization. This is an older form. Our new form is a full page, and it requires that management sign off as well. And on the newer form, management is making a statement that they are going to protect all of the residents' documents, and so that's a really good addition on our newer forms. This was our old really basic simple form. Didn't want to show you the whole thing, so just wanted to show you that all 3 adults have signed their applicable forms. Next, we have our household declaration supplement to the REA. It's for initial certifications only, which means you only do it at move-in. You do not do it at recert. This form is a way to ask some of those questions that you need to be a little bit careful about. As far as fair housing goes, you typically can't ask somebody, you know, are you married? And, you know, maybe asking them, are you pregnant? That sort of question. So this form is a way to ask those questions. It has been run by the Tacoma Fair Housing Office, and the idea here is that if you need to know the answer to these questions in order to make sure your household is fully certified, then it's okay to ask them in this manner. So first question is, will anyone be residing in the unit who's not listed on the REA? So this is just a check of, did you get all the household members? Second one, do any household members have a spouse who is not listed as a household member on the REA? We need to be a little careful here because HUD rules say that if you, and we follow HUD rules when we're looking at how we income qualify a household, they say that if there is a spouse, even if they're absent from the household, their income needs to be disclosed and needs to be included on the certification. And that's why we're asking if you have a spouse. So if this comes and it says yes, then we're looking for the spouse's name and their source of income, but we will have to get a full REA and a full income verification for that spouse unless the household is legally separated or they've already have a defined separate household established to the point where they could complete our estrangement form. Okay, so if you have that as a yes, you want to take a look at that estrangement form, but it really only is when you already have a separate established household, not claiming taxes together, not sharing income, but for some reason they just haven't completed the legal part of their separation yet. And then the third question is, will anybody be joining your household within the next 6 months? That is kind of asking, maybe someone's engaged or planning to be married and you really want to know about a spouse that might plan to be added to the household within the next couple months. It's also a way to ask, if there might be a baby, because we put the when expected, if there might be a baby that's going to be added to this household in the near future. The reason, of course, we might want to know that is if an unborn child is going to be part of the household, you can count that unborn child as a household member when it comes to the income limits. So sometimes you might have a 2-person household just slightly over the income limit, but if you can document that there's an unborn child, and we have a pregnancy certification for that, it's just a self-certification, then you could include that unborn child as a household member and use the 3-person limit. So that's why we want to ask those type of questions. We ask that all adults in the household sign the form. Okay, so now we're going to look at the income that was disclosed and go through these verifications to see how we would in fact calculate up the household's income. So we have Sherry, who is our head of household, working at Island King. And what we're really looking for is these numbers here. Make sure the form is fully completed. If there are blanks, you would want to do a phone clarification. If the blanks are, for substantial information, like any of the information that's circled, you might want to go ahead and, depending on how you got the form faxed to you, emailed to you, you might want to send it back and just ask them to please add the missing information, or you can do a phone clarification as well. So what we see from this is that Sherry works, has a job, $19.50 an hour, only 16 hours a week. They've given us a year to date, but notice they said $30 an hour for overtime and hours vary. So that's something that we're going to need to get a clarification for. And thankfully there was a clarification in the file, and I just pulled out the section that has the information that we need to see. And please notice that when you do a phone clarification, don't re-ask every question on the verification form. You just need to ask those questions where you need clarification. So the only thing we needed to know about was the overtime hours. We asked about those, or the person who did the verbal clarification did. And we're seeing an average of 1 overtime hour per week, which if you think about it might be a little strange, because if this person only works 16 hours, why would we be seeing an hour of overtime? So when you have a situation like that, it's good to use that additional remarks area. This one has in that this person is paid overtime rate for any hours over 8 hours per day. Typically when that happens, that means this person is part of a union, but not always, and sometimes gets up to 1 hour a week of overtime. So that has answered our question so that we can go ahead and do the income calculation. Now this inset that I just popped up, this is from the HEC, the Housing Eligibility Cert, page 3. This is an area we give you to go ahead and calculate income. If you use your own income calculation spreadsheet, that's fine. If you use a 10-key tape that you're going to tape on to your certification, that's fine, as long as it doesn't cover any other vital information. So you don't have to do both, but you do have to show us your calculations somewhere. So here is the way it would show on our housing eligibility cert, or our HAC. We've got regular pay, $19.50 an hour, 16 hours a week, times 52 weeks in the year. If you multiply that out, that's $16,224 for her regular pay. Then we would need to add in the overtime, $30 an hour up to 1 hour a week for 52 weeks. If you multiply that out, that's $1,560. And of course, you would need to add those two amounts together to see what her annual income from the job would be. And then we're going to ask you to do the second inset that I just pulled up, which is also on our HEC, just on the bottom half of the 3rd page. And we're going to ask you to compare what her year-to-date earnings are. So from her verification, we know that from January 1 to March 20th, she earned $3,995. The sheet that I had provided with the case study that counted weeks for you, notice we only want to count full weeks. So if it is 11 weeks and a couple days, we want you to count 11 weeks, not round up to 12 weeks, so only the full weeks. Once you put that part in the HEC, it will go ahead and calculate out the weekly amount for you, multiply it by 52, and give you an annual earning, and that is $18,885.36. You would then want to compare those two and see which number it is that you're going to count. And because the $18,885 is more than the regular pay plus the overtime pay up above added together, the $18,885 is what would be used for Sherry's income. So I'm going to pause just for a moment. You can fill this in on your HEC if you haven't already. We will also look at all these numbers put together on the HEC at the end. So the next type of income we're going to look at for Sherry is the child support that she listed on her REA. This is a printout from the Division of Child Support, right? This is when the state is collecting the funds and then turning them over to the resident. The great thing about these verifications is that it typically gives you a full 12-month history. So this one, if you look down at the bottom, date range requested 3/16/2015 to 3/15/2016. So we're getting a full year of verifications or history. It tells us the monthly order amount, $700 a month. And then if you look at the history, you'll notice that that doesn't always happen. So when we look at child support, we have to look at several things. Remember, we only want to count not what's ordered, but what's really being received. So a 12-month history is a great way to see what's really being received. You do have to make sure though, and that's totaled up here as $5,092. You do have to make sure though, if a resident is eligible for arrears, which means, at some point in time, they weren't being paid their full monthly order amount, and so there's back pay that's due to them, that amount is counted as well. And the way you see if arrears are due is right here where it says CP arrears, the $1,432. That tells you not only is this person eligible for $700 a month, but there's also, this $1,432 that they could be paid as well. Now in that CP arrears column, you can see over the past 12 months, $908 has been collected in arrears for a total of $6,000, which is both the regular payment and the arrears. Sometimes individuals, they might not have any arrears left. And so just because somebody got paid arrears in the last 12 months, if there's nothing left for them to receive any additional funds, then you would just go with the current amount that's being paid. For this file, there was also a child support affidavit collected. It is really nice because it agrees, right? It says $700 a month. It tells you the children that are part of that order, which is really important. Sometimes, this household has 3 minors, and sometimes we get one child support affidavit and we're not sure if that covers all of the minors in the household or not. So you really want to make sure that they're using those lines to say who is in part of the support order. Let's say sometimes there's 3 children like in this case, and maybe no support was being received for Samantha, so she'd be listed under number 1, but if the $700 were just for Mark and Mandy, then they would be listed under number 3, so that you get a complete picture and make sure you have addressed the issue of child support for all the minors in the household. So this one clearly says $700. It says she does expect to get $6,000 for the next 12 months. Now on this one, the child support affidavit, it's nice backup for the support enforcement printout, but the support enforcement printout would be considered the stronger verification, and the child support affidavit wouldn't really be needed, although it is nice because it does tell you the support in this case is for all 3 minors. If you're using the child support affidavit as your only source of verification, it definitely needs to be notarized, as you can see on the bottom of this form. So for child support, when we come to looking at the HEC, oh, sorry, I forgot to click on these for you to point those areas out that we talked about. On the household eligibility cert, we would show Sherry, child support, $500 a month, $6,000 for the year. Again, I'll just pause a moment. So if you want to fill that in on your HEC, if that's not what you already filled in, please do so. Okay, and next up, we're going to look at Samantha's income. And again, we have an employment verification, we have information. Nice thing about this one is everything was completed, so no follow-up verifications are needed. We have $10 an hour, 15 hours a week. We have a year to date. No other income disclosed as part of this verification. So we now have the information we need to calculate up her income. Or do we? Notice when I calculate up her income, I have $10 an hour times 15 hours a week times 32 weeks in the year. Now, if you're thinking, how did I come up with 32 weeks? Well, remember when we looked at Samantha, when I told you to look at her birth date and that she was 17 and going to be turning 18, what we want to do is we want to count her income not when she's 17, but from the time she turns 18 until the end of the certification period. So this certification is beginning on 4/1/16. Samantha doesn't turn 18 until 8/22 of 16. So that is a little over 20 weeks when we will not be counting her income. Okay, so we have 52 weeks in the compliance period. Remember, we're looking forward. 20 weeks until she turns 18. So we're going to count 32 weeks after she turns 18 until the end of the compliance period when we're looking at her income. We're going to count that same 32 weeks when we're looking at annualizing her year to date. So from January to March 15th, she earned $1,525. That is a total of 10 full weeks. And notice when you use a number other than a full 52 weeks, the heck, there are some blank lines at the bottom of the year-to-date calculation field where you can put in the number of weeks. So in this case, I put in the 32, and that calculates out then for us. So looking at our income, we have $4,800 at the $10 an hour, 15-hour a week rate, or looking at our annualized year to date, we have $4,880, and of course we're going to take the higher of the two. So $4,880 is what we're going to count for Samantha's income. Now, when I do this class live, I usually keep this till the end, but you may be asking, well, wait a minute, if Samantha is a student and she's a dependent in the household, what about only counting $480 of her income using the HUD rule that says that we can do that? At the commission, we ask that if you're going to use the $480 rule, that you verify full-time student status, and that we also want to verify that Samantha is a dependent of the household. Now, the fact that we have a child support affidavit and Sherry is getting child support for Samantha pretty much tells us she's a dependent, but you would want to clarify that as well. So if you had those two things, verification that Samantha's a full-time student and verification that she's a dependent in the household, then instead of counting this $4,880, you could only count $480 of Samantha's income based on her being a full-time student and a dependent in the household. And you know, the time when you would really want to do this is, let's put this certification together, and if this household comes up a little over income using the $4,880 and using the $480, they would qualify. That's the time when you really would want to backtrack, get the necessary verifications so you could count the lower amount. Okay, so we're going to move from Samantha on to Harold, and Harold had Social Security And when we use Social Security, we're always going to count the gross amount, even though there is a lot of times an amount taken out for Medicare, there can be an amount taken out for taxes, there can be an amount taken out for child support, but we always want to count the gross amount. So that's going to be $1,400 in this case. And on our HEC, that is going to look like this, right? Social Security monthly, $1,400 times 12 months is $16,800. Now, because this is Social Security and not a job, we do not have to do the year-to-date calculation. That is only for employment income. So this calculation for Harold is final. Keeping in mind this is an April recert. If this were an April move-in, if this were a recert or a move-in at the end of the year once the Social Security cost of living adjustment or COLA had been announced, then we would want to prorate that COLA in. So if we were counting November and December, say, before the increase for 2 months, and then we were counting the rest of the certification period at the increased amount that would be the 10 months remaining in the certification period. But since this was in April, COLA doesn't get announced till October or November. This is all we would need to do for the calculation. So let's move on to Harold's pension account. The verification that we got back clearly says that it's $415 gross amount for the monthly benefit, and they're not expecting any adjustments to that. So we can go ahead and calculate, and on our HEC that would look like so. A pension paid out monthly $415 for 12 months is $4,980. So that would be Harold's pension amount. And again, because it's not a job, we would not have a year-to-date section. Okay. So that is going to be all of our income that the household declared. Next, we're going to take a look at assets. So you had this asset verification in your certification packet. The numbers were already taken over to the HEC, but if we want to take a closer look at where those numbers came from, we see a checking account, a savings account, and a CD. Keep in mind on the checking account, we always want to take the 6-month average. On any other asset account, we want to take current balance. So the numbers that I have blocked in red there, those are the numbers that are taken and put on the HEC. And then we have the interest rate out to the right. So we can go ahead and apply those interest rates. Now, if you don't get a bank verification and you're using bank statements, please keep in mind for a checking account, to get the 6-month average, you're going to have to give 6 full bank statements in the packet. And when you do that, you need to make sure that you're looking at all of the deposits into the checking account to make sure that the income that was disclosed on the REA is, or kind of matches what you're seeing on the deposits into the account, and that you're not seeing deposits that are not already accounted for in your income section. So when we take that and put it on the HEC, it was already there for us, but we have checking, savings, CDs, filling in the interest rate, filling in the values. Interest rate times the current balance will give you the annualized expected income. Fees to convert to cash, that would be if these weren't amounts that could easily be gone in and drawn off the bank. If there were a fee to get that money out, we would subtract it. We're going to look at that in just a moment with the house. And then we have the cash value all the way out to the right as well. So speaking of house, Harold has a house he told us he was in the process of selling. A couple different ways to verify a house. This is a perfect way. Have a real estate agent or an assessment of the house to see what we think it could sell for. You could also, you could look up the house on Zillow. You could look at the house taxes, at the tax statement to see the valuation of the house there. So a couple different ways that you can look at that to find the value. Once you have the value, you then have to subtract, well, what do they owe on it and what would it cost to sell it? So we have a real estate evaluation worksheet, and in this case, we're going to assume that Harold doesn't owe any money. If he did, you would subtract out his mortgage on the second line there. And then you're always allowed 10% for selling costs, and that 10% is based on the full value of the house, not after the mortgage is out. So that 10% of $275,000 is $27,005, and we're going to subtract that out. Sometimes there's other things that you would subtract out, like if somebody had a home equity loan as well, if when they were going to sell it, they were going to need major upgrades to the house, or if there was a system that needed to be fixed and they had some sort of documentation of that, then you could subtract that as well. So the actual amount that Harold would expect to receive, around $247,000 from the house. And this is how that would look on the HEC. So no interest rate, no income expected from the house. We have the balance, we have the fees to convert to cash, and that gives us our cash value to the right. A couple of other items that were in the certification packet. This household, if you noticed on Exhibit B, had a disabled set-aside. That means every household has to do a disability certification at the time of move-in. Just asking if anyone in the household meets this definition. This household has said yes. If the answer is yes, we need a verification, and we have that as well. Note that the verification can be done by a physician, a relative, a social worker, a caregiver. We ask that the verification not be done by staff, just because we never want it to be a possible fair housing issue where they say, oh, well, the staff said or perceived me to be disabled. So it's always best to make that a third party. It can be someone else in the household, as you've noted here. And the other thing you can use is if you got a Social Security verification that showed the Social Security or SSI was being received because the person was disabled, you could use that. You could use any other type of federal or state issued ID that clearly said it was for permanent disability. So those work as well. If you don't have a disabled set aside at your property, please do not use these forms. There's no reason for you to ask the question. So just don't do that. Okay. Ready to take this all and put it together. Here's our HEC. Again, we have our household members. We see student status, that we have the 2 household members that are not students, so we don't have a student issue. Then we're going to start putting that income together. We had Sherry's job. We have Samantha's job. We have and Sherry's child support listed under other income. We have Harold's Social Security and his pension. And when we add those all together, or actually once you fill those dollar amounts in, the area in kind of shaded pink on my screen will fill in automatically. So total household income, $51,545. And this is where the income came from. These are the HEC inserts that I showed you along the way as far as what we were calculating for income. This is just putting it all together on one page with all of the numbers that we're going to add together clearly indicated. Here it's a red circle. Sometimes If you circle with a really thick pen, it's hard to see maybe the numbers that you might have drawn through. So you can put an asterisk out to the side instead of circling. Please don't highlight, because when you highlight, sometimes what happens, well, if it's a yellow highlighter, a lot of times we don't see the highlight. If it's a darker colored highlighter, like one of those bright pink or green fluorescents, sometimes what happens is when you copy the file, the highlighter obscures the numbers and then we can't even see them. So a simple circle, as long as it's not covering up any numbers or an asterisk, is a great way to show us which numbers you're going to use. Then going back to the first page of the HEC, we had this section already filled in for us, right? This is the income from assets, the checking, the savings, the CD, and the house that we looked at. When these numbers are put in, again, it will do subtotals for you. Whenever a household's assets are $5,000 or more, you also have to impute what could be earned on the asset. So the passbook rate on this was 2%. So the total household assets of $297,118 times that 2% passbook rate came up to $5,942. Note, that's a lot more than the household's actually expecting to earn, in the most part because that high value on the house, which isn't actually earning any income right now. So we are in the process of changing that passbook rate to 0.06%. Had changed that a couple years ago, and they said they were going to look at updating it annually, but they haven't made a change since then. So our next HEC that comes out will have 0.06% on there, and we are also updating what's in WBARS so that, or our web-based annual reporting system, to that 0.06% so they'll match. So that's coming up, not done yet. So on our current forms, if you use 2% and it makes them go over, you can instead of that 2% fill in 0.06%. and then go ahead and use that number as well. So this adds together for us the income that the household earned plus the income from assets for a total of that $57,488. That carries down into our determination of income eligibility section. So we know $57,488 is what the household earns. We would then need to take a look at the income limits for a 5-person household and see what we could qualify them at. And if you did that, you would note that they just qualify under the 60% income level. And so, yay, right? When they were moved in, they did actually qualify. Now we can actually substantiate that rather than just having all these forms in the file with no calculations showing. We would also want to check that what the rent limit was when they moved in, and if they qualified the rent that they were being charged. So they were charged a total of $1,409 when you add in their rent and the utility allowance, and $1,409 is the exact limit. So no wiggle room there, but it is okay to be exactly at the limit. And then continuing on, part 7 is the student status. Are all occupants full-time students? No. If that were to be a yes, then we would have needed to have met one of those student exceptions, and we would have filled that number in the box. When it comes to this program type area, this is really if the form is being used for other than tax credit, for other sources, you could fill this information in. If you're sending it to us, we know that it's either our bond or our tax credit program, so really don't require that you fill too much in this area. The next section is that special needs area. If you looked at that Exhibit B, you'll notice that they have a set aside for disabled and a set aside for large household. Large household is what was checked here. However, we know from looking at the disability certification that Harold also qualifies as disabled. So you can use either of those set-asides with this household. You can use them to meet the disabled set-aside or to meet the large household set-aside, but you could not use them to meet both in the same year. It's okay if one year you want to say this is a large household, and then the next year maybe you have extra large households and you're short a disabled, and the next year you want to designate them as disabled in W bars and count them that way. So that's okay as long as you don't count them for both set-asides in the same year. It is a requirement that site staff sign off on the housing eligibility cert. We recommend that on at least move-in certifications that you have all of the household members sign the certification. On recertifications, we don't require it, and totally up to you whether or not you want to have the household members. The reason we recommend it on a move-in is, sometimes you're doing the documentation with the household quite a month or maybe more before they're actually moving in. So it's really nice on the day they come to move in, when you're signing the lease, you verify with them that none of their income has changed and have them sign off on the HEC at that point in time. So hopefully you were able to follow me through all of those steps. I did include in here just some certification notes. It has some information about how we calculated with Samantha before and after she turned 18, and just some other notes along the way, just for your reference. So that is the certification. Just a couple more things we wanted to point out for you. On our website, where you can find things that you might need. So in the compliance area, we have our forms and reports, and that is where you can get our fillable forms right now to be using during COVID that have the electronic signature option on them. Income and rent limits, our tax credit manual, our tax credit compliance FAQs. And on this main page, you will also see this compliance memo for COVID. It was recently updated July 20th, talks about rules, what you need to do for recertifications during 2020. We also have COVID FAQs, which answer a lot of questions like, do I need to count the extra $600 people are getting from unemployment? You can find that answer there. And you can also find some guidance about if you wanted to provide temporary housing to either victims of COVID, or that's been expanded to include essential workers as well. And then the other area with the red arrow there is our compliance workshop and trainings. Again, that's where this session is posted and where all of the other parts of this series are posted. Be the first to know, that is if you want to get our e-news and you're not already, that is where you link up with that. E-news is the way we put out information, such as here are the new income limits, or here's new forms that we have. So it's a really good thing to keep touch there. And lastly, here are all the portfolio analysts at the Commission. Right now, we're all working from home. So the best way to reach your portfolio analyst if you have a question is to go ahead and give them an email. You can leave a message at our direct lines as well. It just will be, you'll have to leave a message and we will need to get back with you. Here is my information. If you have any questions about the certification in this case study, or you would like to see a fully completed HEC, if you email me, I would be happy to answer your questions or to send you that full completed HEC that we went through in this case study. So thank you again for joining me on this case study. I hope you learned a lot and it'll help you complete your current certifications. Again, I urge you to, if you didn't already, check out the other parts of this Fundamentals COVID webinar series, and also the forms certification series or the forms certification single webinar that just walks you through each and every one of our forms, gives you a little bit more detail than I did here going through this presentation. So thank you very much.